Hey, what's going on, Cashflow hackers? It's Chris and Matt with Life 180, and today is going to be an interesting video. So we, going through the last couple of weeks, the GFI stuff, we've been talking a lot about WFG, GFI, PHP. We get a lot of people that reach out from these companies. Quite frankly, one of the reasons that I started Life 180 back when I did is because of the fact that I had so many people reaching out to me for so long based on some old videos that I filmed about like breaking down WFG's comp plan, PHP's comp plan, and all that stuff. And those videos gained so much traction. And I wasn't even like trying to do anything, quite frankly. I wasn't trying to recruit people. I didn't even have anything to recruit people to at the time. And I just was doing it kind of as like my service to the industry to like have, an industry pro like myself that understands all the different comp levels and how the products work and how, the difference between the independent channels versus the IMO channels, like these WFG organizations, which I have no problem with the IMO concept. I have a problem with the multi-level marketing concept, but I did these videos and people started reaching out and there's nothing I could do to help them. And eventually it hit the point where I was like, okay, something's got to give. We got to do something to help them. We got to figure something out that we can do. And so we started the Life 180 insurance agency. And it was initially just kind of, every now and then we would take somebody on and help them out. And because what was happening is people would call up and they'd say, hey, I joined this company because I wanted to help people. And what I realized was it's really not about helping people. It's just about recruiting people and kind of selling things. And there's not a lot of education outside of like how to recruit people and how to set up calls. And like, there's sales coaching for sure, but there's not a lot of product education outside of like what the companies offer, which is just pathetic. Right. And so, and that's not what they say. That's my little addition to the conversation, because the training from the carriers is absolutely pathetic. And that's every carrier, by the way. That's not IUL exclusive. That's whole life insurance included. The training from carriers in the life insurance business is pathetic. You need to find third parties that understand this stuff, that have had success in the field. Otherwise, you got some salaried employee at the home office coming up with ways that, trying to share how you can be successful selling life insurance, and they've never done it themselves. And it's laughable, right? So when we look at this, we've had a lot of interactions and engagements with people, but Matt has been doing some research, and he found 3 different promotional comp plans. Or comp plans, not the full extent of the comp plan. So I'm not going to try to position this like it's all inclusive, all encompassing. So right out of the gate, I want to just be real clear about that. This isn't like the all encompassing deep dive comp plan for each company. What this video is going to be a comparison side by side, GFI versus PHP versus WFG. And what we're going to look at are the promotional guidelines, meaning what do you have to do to reach the next promotion, right? Because at the end of the day, all these companies, and by the way, Life 180 is no different in this capacity, is like you start off at a level, and based on your production as an individual or recruiting, every company is a little bit different, right? And so we'll talk about what the different parameters are. We talk about what does it take to hit the next level, meaning you start off at 30%. What does it take to get to 40% or 45% or 50% or 60% or whatever it is? Like, what do you need to do? How many people do you need to recruit? How many policies do you need to sell? How many credits do you need, or whatever the system is? Every company kind of positions it a little different, but the concepts and the principles don't change. It all comes down to people recruited, policies sold, team size, all that stuff. So Matt, before we get into it, you have a much more intimate experience with WFG because, you've been part of these types of companies on that level before. So kind of share what your thoughts are before we get into this.
Well, my personal humble opinion, I think it's all a game. It's smoke and mirrors, half truths. It's just like a game that, they get people excited, but they don't really tell you the full truth. And really the benefactor is the company, not the agent. And it's really to squeeze resources out of the agent to benefit the company. And here's the gift in their eyes is if you don't quit, and you gave some benefits to the company, and if you just don't quit, eventually you will be able to do it to somebody else where you become the benefactor. So that's the game. It's like you come in, the company benefits from you, your resources, your sweat equity. And then the gift is, if you don't quit, we'll promote you. And then every person for the rest of your life, you can be the benefactor for them. And that's kind of the exchange that they sell, which to me, I'm like, I mean, seriously, are we in insurance or what kind of game are we in?
What are we doing here?
What are we
Well,
doing here?
I think like WFG and I, like I said, I WFG and PHP are 100% MLMs. Like there's no way around it. I've been having this debate with Matt Schloss about whether GFI is a MLM or not. He insists that they're not an MLM. It's one of those things like, to me, I look at the compensation plan, I look at the recruiting requirements, and that tells me it's an MLM. When you have you got to recruit as many people as you're selling to, if not more, that to me shows the focus is on recruiting, which by definition means it's an MLM. Because you're always going to have about as many recruits probably as you have policies sold. At least that's how the comp plan is. Now, their argument's probably going to be, well, we sell way more policies than we recruit people. Once again, if there's a moral hazard built into the comp plan that says you don't have to, well, then, it's the lowest common denominator is usually the thing that wins out, and where we set our expectations as leaders, that's why, we did a video a couple days ago, or I guess a couple weeks ago now, about, Eric Olson reacting to his conversation with Ethos with the GFI thing. And it drove me crazy about how he was saying out of one side of his mouth, he was like, we're so about helping families. And then out of the next, literally 5 minutes later, he was like, it's all about you getting paid fast as an agent. And so then it really irritated me. I was like, you can't have both. It can't be about getting paid fast, because the products in this business that pay fast, they're not the best most of the time for the client. And you can't say that it's about educating the clients when you're about getting paid fast, because there's no education in the agent doing a one-call close and getting paid fast. So the hypocrisy on all that, as far as, the speaking out of both sides of the mouth, it's, if you're an inexperienced person, you don't understand it, well, then it's easy to have that go by you and get excited about it. But when you understand how the business and how the products and how the comp and how all the process and the underwriting and all this stuff works, it's like, it is what it is. It's just easy to call out. Now, people reach out to me and like, you misinterpreted, Chris. We use Ethos for term and final expense and this and that, whatever. And, and I'm like, okay, maybe that's the case. Maybe you're right. If that's the case, there's a severe breach in ethics by Eric in the way that he's positioning everything in his videos, because he's not saying it that way. If he were to say, hey, listen, there are situations where people are not very insurable and they need this express issue or almost guaranteed issue product, and we have these products that can do that, and this is a use case that we have it for, and for those situations, people get paid fast, and there was no hype about it and all that stuff, well, then I'd be like, all right, that's cool, that's a use case. And there are certain people that are older, that are less healthy, are a little more desperate, that need to pay a premium for that, because the benefit and the risk reward for the insurance company, it is what it is. But I don't think that's it, honestly. I think that, you go to companies like Ethos, and they've partnered with different companies that sell IUL, and they sell these products. And yes, they have all the other express issue stuff, and they also have simplified issue IUL now. And I know this because I went on an FFL video, and I watched them, and I went on a training of theirs with their Ethos people, kind of snuck in, and they're talking about one call closing people on IUL. So when I see GFI get on with the Ethos team, that is the same basic thing they did with FFL, and I watch that whole thing, it's easy for me to come to a conclusion of what's what, and regardless, even if they're not using it, how is HGI? No, it's GFI is GFI, Global Financial Impact. It's Eric Olson broke off from World Financial Group and started GFI, Global Financial Impact. So guys, if you're watching this and you're from GFI, if you're from PHP, if you're from WFG, I encourage you right now to share this video out and get your friends in. Let's talk about it, and let's break these comp plans down. We're going to get into it. But just to finish that thought, though, I just think as leadership, right? You'll notice with me, when it comes to training, I am transparent. I am more cautious than anything, and that leads to maybe slower sales and maybe leads to slower success for people. But I'm not interested in you blasting out, having crazy success immediately before you're even competent and capable of actually serving people. I'm interested in you having a long career and being around for the long haul and understanding what you're actually doing. And so the biggest thing I can say for me is, like, we have to watch our words, right? And when I hear Eric talk like that, I don't care what they actually do, because even if they actually do it that way, he's now using hype to recruit people, which is just bullcrap. Like, you know what I mean? It's just, I don't know. It's weak. It's weak.
Yeah.
So what do you want to do? You want to get into this?
Let's do it. Let's see what they got.
All right. So guys, check this out. Matt has done some fun research. I'll do my best to engage in the chat here as well. Matt, can you see the chat?
Yeah, I can see it.
Okay, so make sure you're keeping an eye on the chat for me, because I'm going to have my back turned to it. So what we have here, we have GFI's comp plan for advancements, and this is like the simplified version of their comp plan. We have PHP's version, and then WFG takes the same thing and basically puts it on 2 pages. Okay? These are the updated versions, or the most updated versions that we've been able to find. They're at least from this year, right? That's fair. And so what we have to do here is let's get in. Let's do a little summary and talk about different things. Now, well, let's talk about it this way, Matt. We were kind of going through this a little bit before we started, right? And we were talking about how we think GFI is going to like start taking people and just taking people left and right from PHP and WFG, right? Because of the fact that, like, when you look at, I think one of the things that is important to look at is, let's start with PHP a little bit here, okay? And so when we look at, let me get my pen the right size here to work with. When we look at, actually what I'm going to do, hold on, bear with me here. When we look at PHP, we have all these different levels. And what I think is important, there's some things to look at here. The trainee level, when you first start here, is 30%. So they start at 30%. And when you look at the requirements here, complete new associate agreement. So you just got to like complete an agreement. And basically when you complete the agreement, what you're doing is you're signing your business over to the company, right?
Right.
You're basically completing an agent agreement that says, hey, I'm going to assign all my commissions to PHP with all the carriers. PHP is going to pay me directly, not the carriers. And with that, if I ever leave PHP or whatever, I lose my entire business, ultimately, is what happens. And so you got to complete week 1 of the system flow, and you got to qualify for Fast Start School. I don't know what qualify for Fast Start School means, but I don't know. It doesn't matter to me right now.
Yeah, what they do is they'll have Fast Start School, which is just a class that they highly promote to leverage you to hurry up, get your plan done. So it's like more focused on internal consumption or get your lists done. So everything that people usually don't want to do, they'll include that just to get into the Fast Start School.
Got it. Okay. So you get that done, and then we hit level 2. And I'm going to try to fly through this, because otherwise, if we go deep on everything, and if people are watching and have comments, feel free to ask questions, or like, if you know this comp plan deeper, challenge us and ask us to go deeper, or like, push back, because the goal of this is just to be an overview and to share kind of what our thoughts are around it, right? And so we have an associate 40% in 30 days. So within 30 days, you got to have 3 directs, meaning what? Recruits?
Yeah.
Okay, 3 direct recruits in the works. My guess is probably, it doesn't say they're licensed, because I know they have a delineation between licensed and
3 directs is 3 people that actually paid the membership fee to join.
Paid the membership fee. All right, 3 directs that paid the membership fee, 3 submitted applications with 3,000 total points. So that gets you to 40%. Then we go field associate, which is 50%. In 90 days, you have to do this. You gotta have a licensed person in your downline, or do you have to be licensed? What does that mean?
I don't know exactly how they do it, but I'm assuming at this point you have to be licensed, because in the beginning you're not required to be licensed.
Yeah, but how could you do this and get paid and submit applications without being licensed? That's what makes no sense.
Because you don't get paid. They're writing your policy and they're going on appointments and they're closing them and you're not getting paid.
Okay,
Yeah,
so you don't get paid on the first three pieces of business you do with this.
actually, sometimes I don't know if PHP does this, but the original system requires you to give up your first 10 appointments. Now they deviated from that.
That's intense.
Every team's a little bit different, but your first 10 you give up. Like I gave up my first 10.
Okay, that's intense.
Yeah,
good to know. So then let's go down to get to director level. Let's talk about what I'm going to do is I'm going to break these comp plans down to get to 60% in comp. Okay, and then we'll do them all to get to 60, and then we'll advance beyond that and look past the 60%. Is that fair?
Yep.
Okay, so we'll do it in phases. Otherwise, I will spend too much time on PHP and then go back and forth. So let's get to the 60% level. Then we'll do WFG to 60%, and then GFI to 60%, and that's it. So 2 direct FAs or 1 direct FA plus 2 direct associates, right here. So you need field associates. So FA is field associate. So you need 2 direct or 1 direct and 2 plus 2 direct associates. I don't know, like 6 licensed and appointed agents on your team, 30 base recruits. So you got to have 30 people who have paid the fee, right?
Yeah.
30 submitted applications for 60,000 submitted points just to get to 60% in comp. Okay. So that's a lot. We're going to use this as our benchmark and compare things to. Okay. Now let's go down to WFG. Is that fair? Let's see. Got to go here. Got it all in one place. So walk me through this because you're more familiar with this. You looked it over more than I did. It doesn't break it down on this level. So they break it down into 2 pages. They don't make it as clean and easy to understand. So what happens is if you look at this, they don't have a 60% level. It looks like they go right to 65, from 50 to 65 with a senior marketing director. Is that fair?
Yep.
So, okay, so let's just compare 65 to the 60 of PHP because that's kind of apples to apples, or close enough, or as close as we're going to get. Fair enough?
Yeah.
Okay, so to get there, what do we need to do? What do we need to do? So let's look at senior marketing director, which is here, and this will tell us how we get there, right?
Yeah.
So in 3 months, we have to have 3 direct legs, meaning 1 direct leg. Okay, so 3 direct legs. So this is like straight up MLM comp plan. So you have to have 3 direct legs. I don't know. Is this image not clear, Matt? Is it clear to you?
Yeah, I can see it.
Okay, well, unfortunately, if it's not clear, it's because of the resolution on the stream. Maybe when it buffers, it'll be a little better. But what happens is we have senior marketing director. You have 3 months, 90 days. You got to get 3 direct legs, and 1 direct leg must be a marketing director level. So out of your 3 legs, so it's classic MLM. You know, you have you, and you got to go recruit, and those 3 legs got to be successful, and one of them has to be a marketing director leg, and then they go recruit and do the repeat, and then that's how you build your tree out, right? This is kind of classic marketing director or classic network marketing world, right? Out of this, to hit the 65% level, you have to have 10 people in your downline. 6 of them have to be licensed, okay? Which, you know, I don't. And you have to have 75,000 base points. So PHP was 60,000, right? WFG is 75,000 base points. I'm not sure if they calculate the same. My guess is it's probably fairly close to each other.
Probably.
It is what it is. And they allow you rolling cash flow 35,000 or over 12 months or 20,000 over 6 months. So it's really not hard. I mean, they make a big deal out of getting to senior marketing director. You have a good team starting, but you're still really, like, let's face it, if you're only making $35,000 a year, that's not really a full-time income at this point in time, right?
Right.
Yet they parade these people across stage like they're the rock stars. I don't know. That's just me. Alternative. What is the alternative here? 6 months, 12 months, 150,000 base net points. Yeah, so it's the same thing, rolling cash flow. I don't know what all that means. It doesn't really matter for the sake of it. Let's go up to global financial impact, GFI. Okay. 60% contract on all products. Okay. So that would be term and IUL and, you know, the life products. Yeah, exactly, Janelle. Exactly. So what we're doing here, let's talk about this. So remember, PHP to get to 60,000 equals, or to get to 60% is 60,000 credits. WFG equaled 75,000, and GFI is only 45,000. And 50% of that has to be personal. So 22,500 has to be personal, okay, to be able to do that. So at least GFI is like requiring some production, right? Which is not as indicative in the other comp plans. So I got to at least give GFI credit for that. You only have to have 5 licensed agents, whereas the other companies I think required more. What was PHP? 6 licensed and appointed agents, but then 30 base recruits. But you have to have 6 agents with PHP plus 30 recruits in the pipeline to join. This one at least doesn't have any additional recruits that it's mentioning. I don't know if it's anything's there behind the scenes. But then WFG, same deal. You have to have 10 people, 6 of them licensed. So it's like, I'm reading that as you have to have 6 licensed, you know, right here. And out of those 6, out of the 10, 6 are licensed. So that's basically like 4 recruits. So GFI is definitely, as far as getting to this 60-point contract level, far and away the easiest. And I think this is just the nature of competition, right? PHP and WFG, you know, if you look at WFG was 75,000, PHP was a spinoff of WFG, and they got to 60,000, and now GFI is a spinoff of WFG, but they got to beat PHP, so they're going lower. So guys, what this is called the race to the bottom. That's what it is. They're not focused on value creation. They're not focused on all this stuff. They're just like doing this comp plan game, you know, and they're selling the same garbage IUL. And not really teaching people how to build their business, not really teaching people, you know, well, let me say this. They say they're teaching you how to build your business because they're telling you how to recruit and recruit and recruit. Hello, what's up, man? Logan. And so they say they're doing all that. They say they're teaching you how to build your business, but the reality is they're just teaching you how to recruit, throw mud against the wall, hopefully some stick, and have some internal consumption and sell some policies to the people that you recruit. You know, while they're in the early stages at 30% contract level, maybe 45% contract level. So you get a good override, and you probably even split the case, if not take the whole commission for yourself, and don't let them write business on themselves in their own life. You know, I don't know how GFI works, but I know that's how these other companies work. And so, but either way, you know, when we look at GFI going through here, if we like give them the kind of due diligence of going back and comparing and spending a little time going through this, we can see that when you first start on with GFI, it's 30% comp level. And you have to complete an independent contractor agreement, and you got to get licensed and appointed. So at least like, all right, you're licensed and appointed immediately when you start there, right? So that would lead me to believe that if you're licensed and appointed, you should be able to write business on yourself. Is that fair?
No,
I don't know.
No, you won't.
That's not fair.
I don't think you will be able to.
Guys, anybody here with GFI? Can you earn commission on writing your own policy? Anybody here with GFI want to tell me this? Nobody's going to speak up if they don't know.
Yeah.
Or if the answer is not to the benefit, like if it's not a resounding yes, they're gonna be like, all right, we're out of here. So then to get to 45% in a comp, you got 3 direct recruits and 3 families helped. Right? So basically it's the same. And then you can see to get to 50%, you got to have 10 directs and 10 families helped. 3 of them personal, 3 of them personal. So once again, this is more about recruiting right away. The thing that I have a problem with this comp plan is that especially even here, if this is all within the first like 90 days, first 60 days right here, I got news for you. You as a new agent are not capable. It's not encouraged, but it's possible. Okay, so it's not encouraged. That's a problem. It should be like a given that if you're writing business on yourself, you get paid your commission, in my opinion. That's kind of best practices in the career model. It's best practices. Well, with what we do with our comp plan, like I don't understand. I would never write a policy if I'm licensed and give somebody else the compensation. That's just ridiculous. And that just shows, like, if it's encouraged to not, well, I know WFG and PHP definitely usually don't allow it. So at least if it's not encouraged, but it's possible, if you're sophisticated and savvy with GFI, you can at least probably get away with it and do it on your own. But the biggest problem I have right here is this thing right here, where when you're within your first 60 days, you're not capable of supporting people. You're not capable of going out and helping other people be successful in this business. I'm sorry, you're just not. Like, you may have the best of intentions, but only out of 10 directs and 10 families helped, only having 3 of those being required. That's saying you're supposed to go help people do 10 or do 7 more. And like, you probably don't even know like how to go through the whole sales process yet. You should not be recruiting people at that point in time. And so then you can see here, then obviously we get to the 60-point level and 60% level. Matt, you got anything you want to say so far?
Yeah, actually, like everything in these types of organizations, everything is intentional. There is nothing by mistake. Yeah. So the reason why they have you recruit early on, and it makes sense for what you said. They recruit mostly greenies. So how is somebody brand new to the industry going to add value to somebody that they recruit? Here's why. What they do is the leadership wants you to recruit, and then they make you feel comfortable, like, hey, I will train all your recruits, because what they're ultimately trying to do is making sure if you go, they already have your replacement. So yep. in those types of organization, they say you're not a recruit unless you have a recruit, or your recruit's not a recruit until they have a recruit. And so really, they already know 90% of the agents are going to quit. And my philosophy is, we know that of the industry, but I think these companies actually contribute probably 80% of that, 90%. So they already know there's going to be a high volume of people quitting. That's why they want you to start recruiting, because if you're the one that quits, guess what? I got 3 of your friends. The chances are one of them might work out. And that's why they structure it that way.
That's pretty scary. So let's talk about like when we talk about hitting executive marketing director. Let's stick on global financial impact right now. You need well, first of all, you get $100,000 ring at this level. That's pretty cool. Your personal contract is 80 up to 85%. So you go from 60 to 80. That's a pretty substantial jump, right? So this, yeah. I would say that at GFI, and every company has their own comp kind of breakdown. Obviously, we're looking at it. Okay. So check this out. I've got some comments here I want to see. So Logan from Hazeltine said, doesn't this look like a pyramid scheme? Here's what I'll say though, Logan. It's not a pyramid scheme. Pretty much, and I agree, most corporate structure is kind of an indirect pyramid scheme. I would say that even most life insurance companies have an element of network marketing built into it, because it's all about recruiting and overrides and stuff like that. And that's a part of agency building. I always kind of used to joke that life insurance agencies and career life insurance agencies were kind of the original network marketing companies, all the way back from the 20s and 30s and 40s. And so, and it is what it is. So I have no problem with building an agency. What I have a problem with all these companies is the fact that when you sign up with them, you sign this contract and you assign all your commissions to the company. And if you ever leave, you lose the business. You lose everything in that, And it says, Janelle just said, if you can't move up the comp structure from individual production alone, that's really a Ponzi or a Ponzi adjacent structure. I think the definition of Ponzi, and Janelle, I don't disagree with the spirit of the comp plan, but I would say that really when we look at the comp plan and we say like Ponzi scheme, I just want to be really careful. Like, I'm not saying I like their comp plans. I think there's a lot of moral hazards in their comp plans, but I don't think it's a Ponzi scheme. The definition of a Ponzi scheme is that, or a pyramid scheme, is that the people that, if I were to recruit you, Janelle, for instance, in GFI, even though I'd never be part of GFI, if I were to recruit you in there, a pyramid scheme would say, that Janelle is never going to be capable of making more than Chris because of the fact that Chris recruited Janelle. That would be a pyramid scheme. It would mean I'm above you, you're below me, I recruited you. And so if the compensation plan doesn't allow you, Janelle, to make more money than me, even though I recruited you, that's a pyramid scheme. And that's where the FTC gets really nasty. Now, from a technical perspective, these companies are not pyramid schemes. They're not Ponzi schemes. But there are a ton of moral hazards in the comp plans, right? And so it's just important to know. As I know, in this insurance business, even lowest level person can beat top level senior person income, but not possible in the corporate world. Yeah, exactly. Yeah, I mean, like anybody can get in here, and it's going to be very production performance based. The problem that I have with this, with these companies, is the fact that, you know, even in this, the thing is like to hit this first 60 days to recruit 10 people and have 3 personals, like that just shows like your first 60 days in this business, you should, I'm sorry guys, you should not be focused on recruiting. You should be focused on yourself. You should be focused on growing your own intellectual capacity, your own product knowledge, your own getting your own financial house in order, learning how to communicate, getting your own marketing systems in, building your own business foundation, not relying on just some sales decks and sales pitches and just learning how to sell based on this, you know, this myth of financial education that these companies want to pitch, right? Like to me, that's the big deal. So when I look at that, yeah, so cool, Janelle, fair, I agree. But when we look at this executive marketing level, we're talking 150,000 points. I'm going to say in 6 months, or 240 in 12 months, 1 marketing director leg. So meaning you got to have 1 person that's done this. And so once again, now what do we have? We have that MLM kind of hierarchy with all the circles in the tree of like who's on your team and all that kind of built out. Which, you know, I don't necessarily have a problem with that per se if people want to build their own agency, but I just think you should not be allowed. My opinion is until you pass an actual competency test on how life insurance and IUL actually works, right? How, if you can't explain to me how the indexing options work, where the risks are, where the policy loan risks are, if you can't explain how the different indexing options work, how the flow of money works in IUL policies, if you can't explain all the different levers that insurance companies can leverage to put you at risk in an IUL, if you can't understand all the different types of blends and ways, and if you're not able to do that on yourself and for yourself, you shouldn't be allowed to recruit anybody because you can't lead anybody. And I don't know about you, Matt, but I'm not going to recruit somebody into something that I don't understand yet.
Right. Yep.
Because now I'm putting my entire brand and reputation on the line for something that I don't even have my head fully wrapped around yet.
Yeah. But they got Doug Andrews.
Guys, that's how relationships get destroyed. Just saying. Yeah. Just saying.
Yeah.
Join these companies if you want to ruin your relationships. So, all right. So that's 85 or 80%. Let's just call it. That's where you hit 80% for the first time. Okay. Now let's go over and look at, this is going to be gross. So with PHP, you hit it 80%. Ready? Oh my gosh. This is absurd. This is absurd. You gotta have 8 marketing directors to hit 80% in 90 days. What the hell? That's pure insanity, dude.
Yeah, that's massively recruiting.
240 licensed and appointed agents to hit 80% in downline. 400 more super team recruits. I don't even know what that means. 400 super team applications and 600,000 points paid. I got news for you. If the goal, everybody always says, oh, you got to build your business. Like, this is how you get there. If you were to, like, I don't even know. I don't want this to make this about us and what we do, but like, this is absurd. Like, okay, that's just ridiculous. That's like criminal to me. What is it in WFG? They don't even show 80% here. They just kind of cut this off. I think this just kind of stops. They don't. This isn't this. Maybe we only have a part of the comp plan. It only goes up to this.
Yeah, I think their executive might be 80.
Yeah, there's senior marketing director, executive marketing director. Oh wait, level 65, level 70, level 87. Is that what that means? Is that a comp level?
Yeah, those are different comp levels, but I don't know why they're not displaying
70
them.
and 87. So the executive vice chairman goes to 87. Net base points is 1.5 million. So it's higher. You could see at 70 points right here, you get to 1 million in base points that you need. Direct senior marketing director legs, you need 6. I don't know what 5 and 10 means, like what the little asterisk advances are. What's it say down here?
Their
I don't
comp's
know.
pretty complicated.
What's that?
They got all sorts of moving parts in their comp.
Yeah, I mean it's complicated, right? It's complex. But this is, at the end of the day, here's the bottom line. When you compare, and I don't want to say anything good about GFI, because I mean there's a lot. I don't like them. They're selling IUL. I think they're misrepresenting a lot of the stuff about the product and the business, and they're out there. But they're winning the race to the bottom, and they're just reducing comp, and it's still the same old, same old. They're making you recruit less people, right? Then especially PHP, less in WFG. It's easier, to hit the goals. You got to sell less, recruit less, whatever, and you get paid more. But at the end of the day, you're still focused on recruiting. You're still focused on, that side of the business before you should be focused on it. And the thing, like, I can't go without saying this. The thing about IUL and the thing about these products or these companies and their comp plans is that it is still, they're selling IUL, period, right? And so with IUL, when you look at this, and one thing I want to show here is that, which one was it here? It was right here, up to 133% for a builder's contract, okay? So up to 133%. I'll tell you what, they pay up to 133% in the builder's contract for GFI. I think that's the best comp that they have that I've seen in any of the comp.
I don't think that's a direct comp for IUL. It's they're adding generations on top of that. It's just a way of selling it, but it's not really.
Right, but they're adding generational bonuses, and I don't know how it goes, but here's what I want to say is that, like, that 133 is like, when we start selling IUL and we start talking about that, what I will say is that, like, I know that some IUL contracts will equal 165%, right? They will give you 165% of target, and that is it. So they can afford to pay the 133. I could tell you, like, so, and this is the funny thing about IUL is everybody's like, oh, it's this great product that gives you this upside potential and downside protection and all this stuff. You're giving up a lot of control. The company illustrates well, but it's never going to perform as it's illustrated. And the people that think it's really good, tell me in a world how they can afford to pay you this higher comp potentially, and give you more upside, right? And still provide the downside protection, yet also pay, 30 to 40 plus points more than whole life. This is the part when we start using deductive reasoning and common sense, which I know is hard for some people. It's not hard to break down that the myth of IUL and what it's quote unquote going to provide people is just, it's bullcrap. You can't have everything. They can't give you upside potential, downside protection, better returns in whole life, better flexibility than whole life, and pay insurance agents higher comp than whole life, right? It's just not possible, right? Like, to me, if you believe this, it just tells me you just haven't taken time to do enough research on what the industry actually operates as, period. Like, that's one of the reasons I have the biggest reason I have a problem with these is, A, I don't think network marketing or MLM should be involved in the financial services space, because I don't think there should ever be a comp plan. I don't think a comp plan in this industry going across this line here should ever be incentivized based on your recruiting. Janelle, I think, said it the best. If you can't move up the comp plan based on individual production alone, well, she said Ponzi, but we agreed to amend that statement a little bit. But you got to be able to, at least for the first couple stages. Listen, I have no problem at all with people just running and building an agency. I'm all about it. I'm a raging entrepreneur. I think anybody that gets into this business, I encourage you to have the aspiration of building a team and building your own sub agency and doing all that stuff. I think it's admirable to want to do that, to have that be a goal of yours. But like anything else in life, I think we got to take our time, like pump the brakes a little bit, right? Like be willing to go slow to go fast, become who you need to be the person that can actually serve the people you want to recruit and the business to help the people, right? To create that ripple effect. One of the reasons I started an agency is because I said, you know what? I got my YouTube channel. I've got 30,000 followers. I'm doing all this stuff. And like, we're doing a lot of business, just through leads that are created through the YouTube channel, because we focus so much on education, and I'd be fine just doing that. But rather than that, we said, you know what? I want a ripple effect. I want to help 1 million people, right? I can't do that on my own, no matter how big my channel gets, pretty much. I mean, I guess it could get big enough, but I'm not patient enough for that. And I think there's my calling, my impact, and my ability to help people is better by building an agency and allowing people to come in and kind of repeat the process and do what I've done. But that said, I don't know, Matt, I haven't even looked at our comp plan in a long time. Like, I don't want to like make it all about that, but like, I'm looking at these numbers and I'm like, it's insanity. Like how many people they have to recruit.
80% with us without even recruiting.
I mean, we start the newest of new people. We start at like senior marketing director comp levels. Yeah. Because like, to me, when's the hardest time? And we allow people to get compensated for their own business. And not only do we allow people, no, we like incentivize it. We encourage it. Like, the only reason I would say like you wouldn't get paid on your own comp is if you get into if like you buy your policy first and then you get excited about it after the fact and then you decide you want to join. That's it. Like, that's it. Which happens, I mean, that happens, but then you're not getting into the business to make money. You're getting into the business because you actually believe in what you're doing. And you're like trying to share with other people what you were excited about naturally, even though you didn't get paid for it, even though, so that part is, I think is great. I think those people I find are typically the best people because they're directly aligned with the values, right? They're getting into the business for the right reasons and all these things. And so, I don't know. I just look at it and I go, wow, like to me, you shouldn't even be allowed to recruit. There should be at least 2 pay bumps before you're like expected to recruit anybody. I think, and that's one of the things when I first started our process, one of the reasons that, be your own first customer, like be a product of the product. Like if you don't believe in this, like our job is to influence people to like really emotionally connect with why this stuff is important to them. If you're not following your own advice that you're trying to sell people to, like, and you don't understand why you did it and you're not emotionally connected to that, then like, how are you supposed to have any influence and ability to get other people to see the value in it? Like if you can't see the value in it enough for yourself. And I'm not talking somebody at, WFG pressuring you to go and get a policy on yourself so you can get motivated and all these things. I'm saying like truly believe in it. And if you don't, then put yourself in a situation where you can ask a critical question so you build your belief so you can actually do it and believe in it and understand what you're getting involved with. And if you don't have that, then run the other way. Run the other way as fast as you can.
Like in a lot of those, every team's a little bit different, but majority of the time, they'll get you to buy your own policy for the next promotion, right? Oh, hey, you just joined and the next promotion associate, but I can get you the next level up. This is what we got to do. Let's get your policy done. So they don't sell the value of getting your policy, right? They just sell it. Hey, just one little check mark so we can get you promoted. And because a lot of times when I'm interviewing a lot of these WFG agents, PHP agents, GFI agents that are coming over and I'm talking with them, they said, yeah, I got my own policy because I needed to do it to get a promotion. I said, well, did you even research if that's the policy you wanted? Like, have you even actually thought this through? They're like, no, I just got one because I just needed it for promotion. So it's just crazy, like the whole system and everything that's built in over there.
Yeah, man. I mean,
there's a big part too. It's missing on the comp, and it sucks because when you build a business over there, they don't really tell you right away. So it's like you spend all this time building this business and they tell you this. So in order for you to graduate and actually get to that senior marketing director or the executive marketing director, the bigger positions, you actually have to
level.
give up one of your legs. So like you built
WFG, right?
WFG, I think you have to do it at PHP. I'll have to confirm. GFI, I don't know if they're going to keep that or not, but it's one of those big things. It's like, wait a minute. And they get to pick which leg that they want. So it's like your buddy that you recruited first is now no longer going to be on your team, and it's going to your upline, which is kind of crazy.
Yeah, and those who are joining ended up buying wrong policies for themselves, which gives money for the uplines. Right? That's what we call internal consumption. That's the problem.
Yeah.
Right. And to me, that's a sad state of existence in this business. To me, that is a big problem in this business with, which is leading to a lot of agents failing. It's leading to a lot of ticked off people. It's leading to a lot of people losing a lot of money. It's really like a kind of a transfer of wealth, you know, like people like that are running these big teams at these organizations, you know, they like to scream against the transfer of wealth from the middle class to the wealthy, but they're doing the same thing. They're like taking advantage. I remember I was sitting in Funnel Hacking Live like 3 years ago. I don't know if anybody knows him, but Rodeo, challenge guy. He's a buddy of mine, and he's also a whole life insurance guy. And but he did like 10 figures worth of like challenge sales. He's like an online marketing genius. And I was sitting in the back of the room with him watching Ed Milet speak. And I was having a hard time because I'm watching Ed Milet speak, and I know Ed and I know his background. I know he's the founder of WFG and all this stuff. And I like have this torn thing because you listen to him and it's like, oh my God, this guy's like dynamic. He's impactful. His story, he had me like tearing up. Like it was like hearing about his dad and his story and all this stuff. And then like Pedro looked at me, he's like, are you crying? And I'm like, yeah, like, I don't know, man. Like, it's like, I know he's like scamming people like on the IUL stuff, but I like, that's a good story. Like he goes, bro, he made all his money off the tears of all his clients. And I'm like, ooh, that's good. Yeah, it's true. It's true. And it gives a different framework. And so like all these people that hit these high levels, you know, I don't know what the level is, but like you go to senior board counsel, or let's go level 13. You hit this like board counsel in 90 days. You got to have 20 marketing directors, 1,500 licensed and appointed agents. That's insane. That's a lot of people. Like to do this, you make a lot of money off the tears of all the people that you misled. That's it. And
think
it's
about
a transfer.
Think about this. Oh, finish what you were going to say.
No, go ahead.
Like those guys that work they're all the way up, board counsel, Ed Milet, even Patrick Bet-David, Eric Olson, I'll call them all out, right? If you sat in a room with them and went through the product like IUL, the pros and cons and how it works, they couldn't even answer that. Think about that. You're leader of all leaders, the king of the crap, right? The number one El Jefe doesn't know crap about the product that your guys are selling. Could you imagine that? Like, what kind of company are you in? Like, seriously, it's just like mind-boggling.
It's the kind of company that, you know, says, hey, we're about helping people get paid in 15 minutes. We change the industry.
It's like with us, right? You're the top, right? You're the top of the company, and you're the product expert. Like you know it inside out. That's what makes sense. Like that makes sense. We don't have to rely on some Joe Schmo from the carrier. Yep. We don't have to rely on some internet YouTuber coming in and training the team. You, as the leader, know it inside and out. And
and I'm really bad too because
they don't even know that. It's crazy.
And I'm bad because I'm the anti like go out and sell really fast. Like, you know, I mean, you've seen, and sometimes maybe to my own detriment, you know, like, but I feel like when you get in this business, you have a responsibility before you go and share it with other people. You know, it's, you better know it yourself. Of course, how many CEOs really know how their product works? Is that a joke? Joe just said, of course, how many people actually know how their products work? I'm going to pretend I didn't see that. Like, this isn't, Ed Milet was not, I got news for you. Ed Milet was not just a CEO. Ed Milet sold actively, face to face. That's how he built the company. He built it selling. He wasn't just a normal CEO, right? The reason I still take 3 to 5 sales calls a week. That's what I do, because I want to stay in touch and connected with people who are doing it. Even though sometimes I don't really have time to do it, I still do it. I try to do it at least. Because I think, and I think there's a reason Elon Musk is one of the best CEOs in the world, because he knows his damn product and he is the foundation of it. But there's a difference. There's you can't compare a life insurance CEO to a CEO of GE that has multiple lines of business and they have all the different, elements of business and all these things. So that he knows that were the heads of these that knew it all. That's it. That froze on me. Did I go? What's going on here? I don't know what's happening.
Yeah.
But that
we're losing you
to
for
me. Oh, I lost you. Did I go away or was that you?
No, you're coming back.
I'm coming back. So we're talking difference, like a wild difference. Like Jack Welch at GE, when he was the CEO, and then division heads and CEOs of different divisions, inside it was a CEO of the appliance division that reported to Jack Welch, and Jack Welch was a leader of leaders. Like business, you build by selling. And so that just proves if Ed Mylett didn't know the product, he just got there by BSing everybody and by selling things he didn't understand, and people followed him because he's a really good leadership guy and he's really good at hyping people up and motivating people, and that's his unique area of ability, and that's there's no denying that he's a massively motivational human being. But I think you have a responsibility in this. You're dealing with people's money. You have a responsibility when you're dealing with people's financial futures, which is one of the most important things in somebody's life. And when you talk to them and you advise them and coach them and sell them a product, you're literally talking about the potential to ruin their life, or potentially positively change direction, right? Not all CEOs need to know everything. I'm not saying that all CEOs need to know everything, but when you're the CEO of a life insurance agency, IMO, and like all of them who got there, Patrick Bet-David started selling. Ed Mylett sold. They're not CEOs because they got hired as a CEO to be a strategic leader. They're CEOs because they started the company and built it by recruiting and doing all this stuff and selling and building other people doing the same thing. That's how they became CEOs. Eric Olson leaves WFG. He's got a team of 20,000 people that he built up. He's now the CEO because he created his company and recruited a bunch of people. Nobody hired Eric. Well, his wife, I guess, apparently gave him the job, and he thanked her for it publicly. Please don't compare the CEO of these IMOs to the CEO of Ford or GE or even Elon Musk. Even though you're right, he's a good example of knowing exactly what he's doing with the product. He could probably get in and code and be an engineer better than the people on his team. I don't know. I don't know. Yeah, even Steve Jobs. I would argue, no, you know what? I'm pushing back at this. Screw that. Steve Jobs, amazing. He was the best he was amazing. Bill Gates was amazing. If it weren't for Bill Gates, those two guys, two of the biggest companies. And then you got Apple, Microsoft, and Tesla. Those are three of probably the most successful companies where if it weren't for the CEOs also being the smartest people in the company, knowing more about the products, they'd be screwed. Now, there are certain instances with certain companies based on certain needs where they got to bring in different CEOs that are there to solve different problems if they're a little more mature, right? After Microsoft was established, they could replace him with somebody, That's why Ed Mylett was no longer the head of WFG. Patrick Bet-David is no longer the head of, WFG and then PHP for Patrick Bet-David. That's why this stuff happens. People come in and they replace them. And now that the hard part is that CEO's job is no longer building the business. Now they're all about the hype and the comp plan and running events and like just keeping the hype train going. That's what these companies do. I think we need to get away from hype and get into substance because we're dealing with people's financial futures, period.
And that's the thing, is like a lot of these leaders, right? They're like high up there. If you were to go up to them and say, hey, look, do you know much about the IUL, and challenge them, they would say, oh, well, I'm no longer in the field. So I don't know that much, but you used to sell it. That's how you got to where you're at.
Yeah.
Don't tell me you don't know anything about it. And the reality is they don't. It's like,
and you know, Joe is saying, take Fortune 500 company CEOs. How many can you name?
I mean, he's talking about something that's not even in the realm.
It's completely
of,
like Joe. Come on, bro. It's
not even
Joe.
The same.
Use common sense, buddy. Please, I implore you, think through this. If you're comparing a Fortune 500 company that's been long established and is doing billions and billions and billions in revenue, right? If you're talking about that, then it's not even the same conversation. It's not even like what is required out of a CEO at a certain level when you're under 9 figures versus what's required out of a CEO when you hit Fortune 500 level, completely different things, right? Like completely different thing. So let's move on because he knows he's lost. So anyway, Matt, you got anything else on this? On the comp?
No, man. I mean, at the end of the day, I don't agree that, and we can agree to disagree with people that are listening. And I would love to debate. We'll go side by side and talk it out. But I just don't think in this industry, this type of model is actually, suitable. I think there's moral hazards. I think, I mean, damn, I was going through the Better Business Bureau and the complaints from all these people. I'm going to do a whole video I'm working on just the complaints. You can't have that many complaints about the same thing unless it's true. Like, look, it's impossible. Totally. Like the endless amount of complaints about the same thing it's just crazy. And you can't be doing good if it's that many complaints about the same thing. There's a massive problem. And look, if you like MLM, selling lotions and potions, good for you. Get the rah, feel good, do something, whatever, that's fine. I just think in this industry, there's no room for it.
Build an agency if you want. Don't build a network marketing company. Exactly. Yeah. But for you to be an agency leader, you need to be a product leader because it means you got to lead your team. And you shouldn't be recruiting until you're ready to be an agency leader. There's a reason in the career model in this business, you can go out and be a manager, but you got to have fruit on the tree first. You got to go show you're capable and competent and, have had results and success before you go recruit people and before they allow you to even get an override on somebody. That's one of the better parts about the career model. Now, the downside of the career model is that you don't get to own the business. You don't, you work for somebody, you work for a big company, you're typically a W-2. When I was a director of business development for one of the top IUL companies in the country, that was my plight. I felt stuck. I didn't believe in what I did. I didn't own it. I had to walk away. It's really refreshing to hear how seriously you take the responsibility of building these financial products. Yeah, man. Like, I mean, girl, it's I just like, these decisions are like literally tipping points potentially in people's lives, and I can't stand how all these companies, GFI, WFG, PHP, they market financial education just as a way to use a pitch deck to sell an IUL product. To me, that's a problem. That's why I've always had a problem with sales slide decks, to help people sell. Because to me, I don't care how good the product is. Everybody knows that I don't like IUL, but let's assume IUL was great. Like, I still wouldn't like it because it's still not about helping the people solve their problems. It's about whenever there's a call to action at the end to buy a specific product, which there always is with these companies. It's never really about the person. It's about selling your widget. It's about selling your thing. And we got to make it so. Why can't we make a sales process, which, by the way, we can, but why are people not doing it in a way where the sales process is really connecting with people and asking questions and really getting clear about people's values and beliefs and their goals and their visions and their mission in life and all these things, and like really getting clear about like getting to know the people that we're trying to serve so we can, actually serve them and actually figure out how we can help use the intellect and the knowledge that we have to fill in the gaps for them to help them get where they want to go. Like, to me, that's our responsibility in this business. And if you're doing anything but that, please get out. Please leave.
Yeah. I mean, their priority is making money, getting promoted, versus making money should be a byproduct of helping people.
Yeah.
Shouldn't be like your number one priority.
I'm not going to get into our comp plan. If anybody ever wants to see it and get it, I'm happy to share. I don't want that to be about this video. But our first pay jump, where you get a 10% pay bump in our comp plan, you know what you do? You got to go through and take like an 11 module course that is probably 30 hours of video long, and you got to pass a certification test that shows that you know what you're doing. And rather than going to sell people, if you want to wait to go sell people before and try to help people and educate people, wait, take your time. You don't even have to go, do a joint work with somebody. Just go take that test. Get confident, build your confidence level. And once you do that, I'll give you a raise. Like, that's what should be in place. That's when it's about like really dedicating to your craft. That's what it's about, becoming a professional. That's what going and showing that you can recruit 10 people in your first 60 days doesn't mean absolutely anything about your level of professionalism and your capacity to help people. It means you're really good at being full of crap. Even if you don't know that's what you're doing, that's what's happening. That means, I promise you, I'm getting intense here, but like, if you, in the first 60 days, if you've gone out and recruited 10 people, that means you've compromised on your own values. That means you're compromising in the sense that you still don't know anything, but you're trusting people in a way that is putting all your reputation and all your relationships on the line. And you're having faith maybe, but to me, that's just dumb. Like, why would you ever, even me, by the way, I would say, like, listen, I feel like I'm as high integrity as a person as you're going to find. And anybody that's worked with me will tell you the same thing. But what I'll say to this is, if you were to come work with me, I would never expect you to just blindly trust me. That's just dumb. Like, I will never ask you to do something that I would never give somebody else. I'm never going to blindly trust anybody. There's an old expression, trust yet verify. You have a responsibility in this business. Before you trust and go out and recruit and just follow the system and do what they say because success leaves clues and blah, blah, blah. You probably heard these phrases before. Before you do that, you have a responsibility to verify that it's all true, that it's all accurate, that it's actually going to work like they say it's going to work. And if you can't verify for your own policy, for your own well-being. And if you knew how many people I've talked to from these organizations that are like, oh my gosh, I've got this policy and it's a train wreck 2 years in, and now I'm finally realizing it's not doing what I thought. And I thought it was going to do this, but it's doing that and all these things. And what do I do? And I'm like, you're screwed. You're screwed. Because it's called the surrender charge. It's called you designed the policy improperly. And it's called, even if you designed it properly, you'd still be up the creek without a paddle and out a lot of money. But you should have gone through and done your due diligence before putting your own money into it and getting pressured into it because of the dream. They get a lot of people to make really dumb decisions based on the dream.
Yeah.
Am I wrong?
Yeah. No, that's why I say it's all intentional. They already know.
I'm going to call anybody here watching this on Matt Schloss's team. I want to challenge Matt Schloss to have a conversation about this in a debate. He keeps insisting I deleted one of his comments on TikTok, which I never did. But he was all like pounding his chest, being like, let's debate. And then, he's like, oh, you deleted one of my comments on TikTok. I'm not going to debate you anymore. It's funny. Matt Schloss used to be like, all WFG is the greatest company in the world. WFG is like, oh, it's the best. It's the best. Nationwide is the best. National Life sucks. And then all of a sudden, GFI launches. Now WFG is the devil, even though whatever, WFG is the devil, and Nationwide sucks and National Life is the best because that's what they sell, right? So I feel bad for all his clients that he sold Nationwide policies to, and now he's going back publicly speaking like Nationwide is horrible. Like, how do all the clients that he has and all the people that he worked with before, I wonder how they feel about his pivot there. And how can you trust the words that come out of people like that mouth, their mouth? Like, it's just, and I don't see how people don't see this, you know, I just don't. And I love this business. I love this industry. I think what we do is so important. And I know I spend more time on this and it's probably even worth my time spending, but like, I just feel like nobody talks about it, especially nobody with any credibility in the industry. So I just kind of feel responsible to dedicate a little time, even if it's just like to protect people from, you know, my hope is like 150, 200 people see this one video that we're going to do it and they just like pump the brakes. Yeah. Not to say you won't do it eventually, but at least you pump the brakes to slow down and kind of follow what we're talking about. Yeah, but like that means nothing. The participation rates and the illustrations of IULs, I don't care what company it is, it's all a joke. It doesn't mean anything. Doesn't mean anything. IUL illustrations are the most misleading documents in financial history, period. And read the fine print. They'll tell you that they're misleading. They'll tell you that they're not going to perform. They'll tell you where the risks are. They basically go read the disclaimers and all the IUL. Run an IUL illustration, show it run with income, and they'll run it with income and then read all the disclaimers in there. And they'll basically say, if you do all the things that we illustrated in this thing, you're going to be injecting so much risk in this, it's probably not going to work. No, I mean, that's not true, Joe. I mean, some have 60% participation rates. Some have 250% participation rates. Some have, like, it's all over. The bottom line is, okay, I'm going to do this for a second. It doesn't matter. So the bottom line, let me go back here. I'm going to go here. Sorry, guys, I'm producing on the fly. The bottom line, I'm just going to go up here. The bottom line is that when we look at IUL, we have you pay a premium. And I don't care what company this is with. You pay a premium. Out of this premium, some goes to cost of insurance and charges, and some goes to cash value. This cash value goes and it becomes the like an options budget. They take this and they buy call options. And really, no matter what we have, and then based on the options budget and then the call options, that will lead to variables. And every IUL policy has different variables that come into play. You have a participation rate. You have cap rates. You have spreads, spread charges. You have no risk rates. I'll do no NRR for that. You have all sorts of other levers that can be changed and manipulated, right? There's literally like 8 of them that you can go through. I've got videos on it. I don't want to go too far down. My comment was removed. Like, I've never removed your comment. I don't know what to tell you. Suchius.
Oh my gosh. Is this the guy that you went on the...
Yeah, this is the guy that I had to block off my cell phone because he was such a troll. So, yeah, I mean, I removed you from my... Doug agents are very knowledgeable. Doug Andrews agents are very knowledgeable, he says. They are most knowledgeable agents I've talked to by far, but the training and courses are not cheap. Doug Andrews... I've got multiple clients from Doug Andrews right now who, you know, have been sold horrible policies. And, you know, if his, and I've watched his trainings and they're horrible. They're not great. They're misleading. And Doug gives level death benefit policies. He does both, but he does a lot of level death benefit. You're right. And so when we look at this, all these variables are things that can change. The things that don't change with what we're talking about is the fact that we got the options budget and the call options cost. These are the 2 variables that matter the most. So it doesn't matter. These are going to go by this is going to be the input that leads to the output, which are all these combinations of variables. Some companies are going to have higher cap rates. Some people will have lower cap rates. Some people will have higher cap rates, but a lower par rate, and it looks good. But at the end of the day, when you have the same inputs and same outputs on all this, if we're talking the S&P 500, for instance, then it doesn't really matter. Over time, it's all gonna work out the same way. That's the reality. You know, it just, to me, how people don't understand this is mind blowing. And this is why they started creating these no capped indexes, these engineered indexes, because of the fact that what happens is the call options are getting so expensive with S&P 500 options. So they had to go create these other index options that are laced with tons of fees, tons of hidden costs. You know, it's gross. So Janelle has another question. Let's talk. I love this. Oh, what did I do here? I gotta go back here. There we go. Let's bring Mac back to the table. If we could talk about another question, let's do this. If we can look at another topic, are you seeing policy loan rates on whole life insurance greater than policy return rate? Is that an issue with infinite banking? No, it's not even what it's about. So the answer is infinite banking is not even about positive arbitrage. And this is one of the reasons why IUL is kind of being sold as a better alternative to infinite banking than whole life, because of the fact that the potential for positive arbitrage, meaning if you have the ability to pay a 5% loan and the cap rate is 8% or 9%, you have the ability on a given year to earn that positive spread. One of the reasons I've gone away from infinite banking is because I think it's been misrepresented and misled, and I call it cash flow hacking now. And the reason is because the difference is cash flow hacking goes back to the pure tenets of taking over the banking function in your life to investing in cash flow and producing assets. And the whole premise, I'll do this. I'll go back to the board again. But the whole premise of infinite banking is about having control, right? It's about having a foundation of predictable results. That's the biggest deal, right? So when we look at infinite banking and I say, all right, I've got cash value, let's call it 100,000, right? And I go through here and let's say I want to take a loan rate is at 5.5%, let's just say. And then we have, then we want to take a loan. And let's say the loan is 50,000. Okay. So then we have the, what I'll call collateral capacity, which is the net cash value, I guess I'll just call it, just because to keep it more technical, net cash value, which is what's left is 50,000, right? And so when we look at this, what happens is the 5.5%, let's say the dividend, what's important to understand, and by the way, when they run long-term assumptions, in whole life or IUL, when they say there's a 5.2% dividend, for instance, you got to back about 10% of that off for mortality charges and expenses. So it's really going to be about 4.7% net of gain. Okay. So the question is, why does it make sense for a 4.7%, gain when you're paying 5.5%? A lot of people have a hard time reconciling the math behind that. The bottom line though is like, it's about having a system and having predictability behind it. Like IUL may have like fixed 5% rates with potential to earn 4% arbitrage, right? Or something of that nature. But what happens when it's not that and you have negative 5% when you're utilizing this stuff on real estate and other assets where you need that stability, right? It's the banking requires predictability. That's the point. IUL, predictability and control is what it requires. With IUL, you don't have predictability or control, and that's the problem. And so, and furthermore, I would say that if we take this, if we go down here, the loan, you're going to have $2,500 in loan expense, right? That's what you're going to have. And meanwhile, 4.7%, that's going to be what, $2,350 in growth. So the net cash value is going to go up by $2,350. So you look at that and you go, it's a negative spread of $150, right? So, but here's the deal. The next year you pay this $2,500. So you're buying cash flow producing assets. You want to make sure that $2,500 interest is paid. But now next year you have 52,350 that you're earning 4.7 on, assuming the dividend rate didn't go up, and you're still only paying 5.5% on this 50,000. So now you got that 2,500 again, right? And now you're earning 4.7 on 52,350. I don't know the math on that exactly, but it keeps getting bigger, and this keeps remaining level. And when you do it systematically, it's always predictable. That's what you need for infinite banking to be in place, right? That's how you really have to control the banking function in your life, because you need to know that these variables are controlled and predictable, and that you have control over the levels of the policy. With IUL, that the insurance company always controls and dictates the moving parts and the levers inside of it that help you get to the cash growth that you need for it all to work. Furthermore, the market volatility, they say you can't lose when you have loans outstanding. If you don't manage the loan interest, then it gets ugly. And when you're really banking on infinite banking for positive arbitrage, it gets really ugly, because then you assume that the positive arbitrage is going to make up for it. And if the loans compound, and I could show you, especially when we get to the tax-free income part, it's gross. Yes, the gain is based on the net cash value. You're right. On the cash value, you're right. No, you're right. I was just focusing on the loan portion comparison side by side. That portion. You are 100% right though. It would get bigger. So I was just trying to focus on the 50,000 comparable of what happens to that 50,000. I didn't explain that clearly, but you are 100% right on that fact. Like, so what he's saying, or he or she's saying, I don't know, it just said LinkedIn comment. What they're saying is that what would happen is you're going to have, and so I'm going to go here. So what's going to happen here is that this is true. You got the 2,500 expense. You're going to earn the 4,700 on action, or the 4.7% on here. So it's really going to go 4,700 is what he's saying. And I just 104,700, right? So now you're going to keep earning here, right? And I could have broken it down and done 50 over here and added the two together, which is kind of where my mind was going. But to break it down kind of in that way, next year you're going to earn 4.7% on the 1,047. You're only going to be paying this 2,500 every single year, and that's where the compounding and versus the fixed simple interest rates go. But you need to understand that. It's awesome, Janelle, that you're learning it all. I mean, it's amazing. I think it's phenomenal, and I think keep learning before you go out and go nuts with it. So you're obviously doing a good job. So, all right, Matt, what do you got?
No, I think a lot of people learn a lot of things. A little bit of agency side, a little bit of product knowledge. That's how we do it.
Yep. So, okay. Cool, guys. Well, hopefully this is valuable. Please share this with a PHP, WFG, or GFI agent, because I think they need to know this stuff. They need to know what they're involved with, especially the earlier in the business they are, the more they need to know it. But LinkedIn commenter, thank you for the comment at the end there to straighten me out there. But yeah, I think this is super important stuff. So any comments, any questions, leave them in the comment section below. If you're an agent and you're looking for a home and you want to talk about it, I mean, there's no pressure at all, but you can go to agent.life180.com. If you're looking for a team, if you're looking for the best training in the business, product knowledge, education, if you think we get into it here and on the channel, we go way deeper for the agents than we do even on the YouTube channel and the playlists and everything that we do. Obviously, I think this channel is one of the best places to learn all the technicals and the nuances of IUL and whole life and infinite banking and all this different stuff. But with our training, it's a combination of all the above, because I think one of the challenges and one of the tricks in this business. Sorry, we got motorcycles going behind me here. One of the tricks in this business is you really need to learn how to communicate your story, and that communication of everything is absolutely essential to your success. And I actually got a video coming out in a couple days that's going to be talking about the number one reason agents fail. And it's something that I'd never really even thought about before. And when I realized it the other day, we were actually on our panel live, and I got really ticked off when I discovered it. And then I was like, I spent some time thinking about like the cycle that people go through in this business, and even people that come out of the chute and have a lot of success, where they kind of fall down and where they fail. And what causes longer term failure, even though people that come out and are successful earlier on still kind of get tripped up. And so that video is coming out in a couple days. So make sure you subscribe and hit the bell. That way you're notified when it comes out. I think it's already scheduled, so you can go check it out and hit the notification symbol to be reminded when it comes out if you want. But that's it. Thanks for being here. Hopefully you found value in it. Please like it, share it, get the video out there to people. And we'll see you, I don't know, next week we'll be live again. But I think over the weekend, we got 3 more videos coming out tomorrow, Sunday, Monday, and nothing Saturday except for short content. But try to do a video every single day of some capacity. That's what we do around here. So hopefully you found value in it. Hope to see you around. Till next time, have a blessed, inspirational day. We'll see you. Thanks, Matt.